Hey everyone, it's January 17th, and I wanted to just give a portfolio update as a 27-year-old Canadian investor. So I'm on Wealthsimple, so it's a free investing app here in Canada. It's been around for about 10 years, quite popular. On my profile, my link, got a link in my bio there to sign up if you're interested. And I'm gonna kind of give you a little tour here. So this is my account. I've been investing in Wealthsimple since 2019. Been investing for a little bit over 10 years now. And earlier in 2024, I took out 150,000 to invest in a real estate development. And I'm slowly trying to then just kind of continually investing on a weekly basis and, obviously trying to grow my account as much as I can. And so I'll just take you through here the different accounts. So the cash account here is a high interest savings account with Wealthsimple. Currently, I'm not using it. I've got also my tax-free savings account. Again, the balance here is quite low because I did that large withdrawal earlier in 2024. My RRSP account is here. I've also got a Lyra account. This is a locked in retirement account because I took my pension from a previous employer. So this is a very kind of special kind of account. You can't open it unless you're taking a pension. And then the non-registered. So this is basically an unlimited type of investment account. There's no limits in terms of how much you can invest within that account, but it is 100% taxable. So obviously, you do want to maximize your registered accounts. I suggest the TFSA as your number one priority, and then the RSP. In most cases, obviously on a case by case individual basis, it may vary, but for the majority of people that I speak with and that ask me questions about this, I do recommend TFSA first, then the RSP, and then finally the non-registered. And I also get a lot of questions about taxes. I've made other videos going really in depth on taxes here, but just at a high level, with the tax-free savings account, you're going to put money in there that you've already paid tax on. So when you get paid, for example, from your employer, they deduct, your payroll taxes, and then you're investing those dollars into this account. So it's considered after tax dollars. And then when you withdraw from this account, you don't have to pay any taxes. And while the money's in here, also you're not paying any taxes on any of the gains or dividends that you receive. And then when you withdraw, of course, you don't either. But there is an annual limit to how much you can contribute to this account each year. So you do have to be aware of that. If you just Google TFSA calculator, that'll pop up on Google. RRSP. This account also has a limit, but while the TFSA has a certain amount that every Canadian gets once they turn 18, the RRSP is 18% of your income employment income that you've earned in the previous year. And so it's really, personalized. And then there's up to certain maximums within that. With the RSP, it's pre-tax dollars. So you actually can contribute money and you don't pay any taxes on that money that you're putting in. So like, let's say you make, 100,000 at your job and then you want to put in 18,000 of your income. You'll actually be able to reduce your income tax bill in that year and you'll actually get a refund from CRA on money that your employer has collected and taken off as part of payroll taxes. And then when you're retired, when you withdraw money, you pay taxes at that time. So the TFSA and the RSP, you're paying taxes in both accounts technically, or paying taxes with money related to those accounts. But the main difference is the TFSA is you're paying tax first on the money you make, and then you put it in and you don't pay tax after. And then the RSP, you're not paying tax on the money that you've made from your employer, and then you're just going to pay the tax afterwards. So the CRA gets their money, their taxes, kind of regardless. Lyra, I'm not going to go into just because it's such a kind of niche account. And then the non-registered, a lot of people seem to almost be afraid of paying taxes in the non-registered. But the way that I view it is, if your boss came to you and said, hey, we're going to give you a 20% raise, you wouldn't say to them, oh, please don't give that to me because I don't want to have to pay more taxes. That's crazy, right? And when it comes to the non-registered account, that's exactly the same logic that you should apply to it. And in fact, you're actually going to even pay a lower percent tax than you would on employment income. So it's even a better situation in the non-registered account. But you're only paying taxes on the profits that you make. And so if you invest in a particular stock or ETF and then you make, 20% and then you sell it, you're only paying tax on that 20% gain that you had, just like if you were to get a 20% raise that you'd only pay tax on, that kind of additional money. So just something to be aware of. Now let's dive into the holdings here. I'm just going to flip this over to total gain. So my biggest hold, or actually let's switch it over to total value. All right, so my number one biggest holding that I have is SPXL. This is definitely like a more advanced holding, and I don't recommend it to beginner investors at all. It is a 3 times leveraged S&P 500 ETF, which is definitely on the more advanced kind of risky side. So I've been investing for over 10 years and I have a very specific strategy that I'm doing with this. But the next one here is a VFE. This is the Canadian dollar of the S&P 500 in the US. That's the largest 500 US companies. So I've got 38,000 USD in SPXL and then 35 Canadian in VFE. So quite a bit in the US stock market there. I've also got 12,000 Canadian in TEC. This is a TD ETF that tracks global tech companies. So it's a little bit different than the NASDAQ 100 because this is more focused on, it's similar to the NASDAQ, but it's global tech companies. So it includes NASDAQ as well as others. Cash, I've also got a portion in here. So this money that I have in cash, this is a high interest ETF. It's currently yielding, I want to say it's around, a little bit over 4% there. The money that I have here is money that I need in the short term. So this is to pay for my house, property taxes, and property insurance. And so that's why I have this money sitting in a guaranteed account. I only recommend people have money sitting in like a cash account or a high interest savings account for money that is a guaranteed, money that they need in the short term. So if you're saving up, for example, for like a house down payment, for a wedding, for a big trip that you're going on, or in this case with like routine big bills, that's where I recommend having it in something like this. But any money that you're planning to invest in a longer term and you have, 10, 20, 30-year time horizon, I definitely recommend to invest in some of these other ETFs that I'm showing you, like VFE or TEC, for example. I've also got HSU. This is a 2 times leveraged on the S&P 500. So again, this kind of falls in the same, areas as SPXL up here. So definitely a more risky strategy, and I don't recommend it to beginners. BITU, so I previously made a video that I was holding a Bitcoin and cryptocurrency ETF. I've actually decided to move this over to a Bitcoin ETF that's 2 times leveraged. And so my strategy with this is because I feel like Bitcoin's a very speculative, very risky investment. And so I figure if I'm going to go into Bitcoin with the goal of I'm just going to hold this long term and I'm not, planning to really touch it for a few decades, I might as well, go in on it leveraged. And so what that means leveraged is that when it moves up at twice the amount that it normally would, but then also when it moves down, it goes down twice the amount. So for example, if Bitcoin goes up 20%, this fund would go up 40%. But then of course, if it goes down 20%, this goes down 40%. So definitely a riskier strategy. I always recommend for people when it comes to like Bitcoin, like these very speculative investments, I suggest like 2%, maybe 3%. And so definitely you want to have like a very small portion there. And so that's what I'm doing. HUG, this is gold. So this tracks the price of gold. So I've got a portion going into that. CIAI, so this is very similar to the tech ETF. This is similar, but it's very focused on artificial intelligence. ZRE, this was a real estate REIT that I wanted to check out, and I bought 1,800 of it, or actually what I buy? I bought, $2,097, and it's actually gone down 10%. So I'm going to hold that. It does give a nice dividend, so it's, 4.3%. That's fine. I bought it, and then it totally went down, And so I'm definitely hoping that it goes back up. And I mean, I know it will, and then I'll sell it at a profit. I don't want to sell it for a loss. But definitely for long-term investing, highly recommend, these like more equity funds. HDIV. So this is some money that I'm putting aside for travel. This is a high yield income ETF. So it's 11.13% yield currently. This is a new thing that I'm experimenting with money that I put aside. I want it to grow and then, can earn a bit of a dividend. So the cash ETF is like property taxes that I absolutely need to pay on time. And so that's like a guaranteed fund where it's earning, a bit over 4%. I don't want to have any risk there at all. Whereas with HDIV, this does fluctuate a little bit. I mean, as you can see, it's done quite well, but it definitely does fluctuate. And so the reason why I'm putting, travel money here is because I want it to earn a little bit more than 4%, but at the same time, I'm okay with it fluctuating quite a bit because it's not something that I need to spend on a certain timeline. TPE, this is international companies. So if you think of like Toyota, Nestle, SAP Software, a lot of those big international companies in developed countries around the world. VCE, this is a Canadian ETF. So this tracks big companies like TELUS, the big banks. HXU, this is also tracking the Canadian market, but this is a 2 times leveraged ETF. So again, a bit more risky and not something that I'd recommend for a beginner investor. And then finally down here, SHLD, this is a global defense fund that I have. And so I'm investing here in that specific sector. So that's a quick overview of my account so far. The market's been doing quite well lately, and so it is up. With this current amount that I have here, as you can see, the portfolio value is 153,000, and then my profit since November of 2019 is 81,000. So I've actually made $81,000 in the market in the last handful of years. So really happy with that. And if you have any questions about any of these funds, ETFs that I'm holding, or any of the accounts, just let me know in the comments.